My guest today is Andy Schornack. Andy is a CEO and board member of Flagship Bank, which has more than 324 million in total assets. And Andy is a president of Security Bank and Trust Company. Thanks a lot for coming to the Holdco Builder show, Andy.
Yeah, thanks for having me. Happy to be here.
Quick story before we get started. I'm talking with my father almost every single day, and he's a simple truck driver in Scandinavia, and we discuss various business-related things, even though he doesn't really understand much what I'm doing, but it's getting better. And yesterday we were discussing that I'm having this guest from United States coming to my show, and his name is Andy. And what we were discussing was he said that, you see, Mick, it's so interesting that I'm in my 60s and I'm a simple truck driver. I don't employ anyone. I'm just doing my job. And then you have someone else who has the same life, pretty much the same beginning, and they run pretty much two banks, employ hundreds, if not thousands of people. As we can see, $1 billion in total assets. And it's fascinating what some people really achieve. So my first question to you, Andy, where does this ambition come from?
I don't know if it's necessarily driven by ambition. I look at it as it's a matter of making a difference, right? And so I've been fortunate to be in a company of great people. And it's just worked out that way that, I've had this opportunity, and the opportunities come from, working hard and focusing in. But, I grew up in a family of small business owners. So, my extended family, a lot of them own small businesses. So it's been very, I always wanted to be in a position where I'm running my own small, medium-sized company. I didn't know it'd be bank, right? So I didn't forecast my career to be in banking when I was a kid, but I did know I wanted to be entrepreneurial in some form, and maybe it's a little bit different than what I thought originally, but it's still pretty cool, and it's been a great experience.
Okay. When it comes to Flagship Bank, you joined the board of directors in September 2013, and you were named the president in June 2014. Today, you're CEO. Before getting into all that, let's start with you sharing your background, maybe all the way from university.
Yeah, I went to the University of Minnesota here in the Twin Cities. So I'm in Minneapolis, St. Paul location, in terms of the United States. And I went to college here. I got my university, my master's degree at the University of St. Thomas shortly thereafter. And I jumped right into community banking. So I grew up in northern Minnesota. So Minnesota's my home, has been my home. And, I jumped right into a bank that was growing. So it was a smaller bank, 75 million or so when I joined. And it grew right before the great financial crisis to, a little over 300 million, I believe. At the top. Unfortunately, that growth was right during peak asset bubble times, right? So, we went into the great financial crisis. The bank struggled and spent that was 2005, 2006, and spent the next, 6 years working out of deals. So I got a lot of hard lessons, a lot of early lessons. I invested in the bank with some of my own money, and the bank, ultimately failed in 2012. But through that process, I learned the regulatory processes. I learned a lot about, what's good in banking, what's bad in banking. That first commercial bank was bought by Republic Bank and Trust Company out of Louisville, Kentucky. And I went on to work with them for a little while before we acquired Flagship Bank. So I had, a great experience there where I was able to, manage a significant amount of assets. Brian Wagner, who works with me in Flagship, and myself both worked together through a very challenging time in, American history. We worked through a ton of real estate deals, both on, troubled workouts. We originated a lot of deals, worked with a lot of other banks on participations, which are, like syndicated deals, Mick, where, other community banks worked with each other to do larger loan transactions. And that was fairly common before the great financial crisis. And there was a lot of deals with developments, and different real estate challenges. So learned a ton through that process. And that kind of led me up to Flagship. And then at which point, Flagship was under consent order. I had built a relationship with some investors, and we came in And like I said, in 2013, made an investment in Flagship, and then really been focused on growing it ever since. And it's been a process. It's never a straight up process, but it's been a good one.
Today, while doing the research, I was reading about like about you. I see that there is a flagship bank. You're a CEO with, as I said, 324 million in total assets. I was like, okay, that's unbelievable. I was already finished my research, and then I kept reading about you, and what I found was like, okay, there's another bank, like Security Bank and Trust Company, which has like 713 million US dollars in total assets, and you're president of this bank. And then I only had like one question, and I want to ask it now. Like, how do you do that, Andy? Like, what is the secret sauce?
Yeah, the secret sauce. Well, the banks have similar shareholders, right? So, as we continue to grow and build Flagship, one of our primary investors is the family that owns Security Bank and Trust Company. And so in 2018, 2019, or 2019, I think January 2019, I stepped in as president of Security Bank and Trust Company, and and kind of able, since they're similar ownership, to be able to run both of them. We already do a lot of work together, as part of the process. And currently, we have a application in with the Federal Reserve Bank to merge the holding companies of the two banks, so then they'll both be under the same holding company. But right now, it's been a process that's worked out really well. We share a lot of services. We have intercompany agreements to manage, a lot of the software, the technology, the audit compliance, and that's been a great experience. But it's allowed me in that process to be president of both Security Bank and CEO of Flagship Bank, which is a unique situation because you don't see that very often.
It's interesting. When I reached out to you, inviting to the podcast, you said, "Always happy to talk. Just know most people don't like our industry as much as they used to. Why is that?"
Well, I think there's been a negative connotation ever since the great financial crisis, right? Because there was a lot of challenges and there was a lot of things that worked out, and there was some obviously bad actors that came through our system. And so, even though I think on the whole, we're all out there working, and particularly, on the community bank side, we're always trying to be very strong partners with our clients and their businesses. One of the things I think we do best is we care, right? We really care about how our clients not only are getting loans. So when we're giving loans, we really care about the long term, because for us, the loan isn't just the initial gift of the loan or the lending of the loan to the client. It's the matter of servicing that loan and making sure the client succeeds, because the best loan made is a loan paid, right? So, we want to make sure that they succeed, and we really want to go. But the challenge is through that process, there's been a lot of negative connotation. You see it in the news media still today, complaints about our industry, whether it's the fees or it's the process or, how, lending gets underwritten, where it's always put in a negative connotation. And the reality is, in our industry, is that we're a pro-cyclical industry, right? For us to succeed, our clients need to succeed. So we need our customers to be more successful and to get better. So we're really trying to help everyone. I don't make money when people lose money. That's not a thing. But I think sometimes the public connotation is that somehow we're benefiting when other people get hurt, and that's not the case. And so from my standpoint, I'm always trying to show that from a community banking standpoint, is that we're out there trying to build and succeed and try to help everybody, accomplish their goals, and accomplish their dreams. And sometimes I don't think that message gets set the same way in the public eye.
As a young entrepreneur myself, I found your profile on Twitter. I think it was like 3-4 months ago, and I've been following you. And it's very interesting to see a person like you sharing your thoughts openly on even like where did you travel, pictures with your family, how you think, what are you reading? Because usually these type of people are somewhere pretty much behind the walls. So my question for you, as the CEO CEO of the bank, you've been very open sharing your thoughts on Twitter, on LinkedIn. What inspired you to take this approach, and what do you see as the pros and maybe the cons of being active on social media as a bank CEO?
I think the pros is that I think there's a lot of times that people don't know what they don't know. And I think there's a lot of times where there's a concern for, I'm trying to break down the wall to allow more people access to entrepreneurship and understanding how banks work and how, business works and how good entrepreneurship. I mean, I'm really focused myself. So there's a lot of things I learned from being on Twitter in terms of the people that I talk with and correspond with and just read and learn, right? So I've been on Twitter since like 2007 or something crazy. I started first in the stock area because I'm a big stock guy. I like to trade, invest. And then it kind of morphed more as I, developed my career and moved more into the banking role to now be more on, the community banking and more business entrepreneurship in general. But I think part of it is just being accessible and then answering questions and taking away the mystique of, here's what it takes to build a company. Here's what it takes to succeed. Here's some things that I'm learning. I'm not going to know all the answers, and there's probably a lot of things that maybe I'm wrong on, but building in an open environment like that provides an avenue for feedback. And I'm not right on everything, but I like to at least share my thoughts because then you can get feedback. I'm a very transparent person, and that's the cons that comes with it, right? Is that you create more opportunity for people to, argue with you, or you take a stance on maybe something economical and say you're wrong on the economy and the direction of where things are going. That's obviously, a reflection, but, as long as I block and tackle and do my day-to-day business well, I should be able to succeed. And there will be bumps in the road. The last 10 years have been peak credit, right? So in the banking industry, you can't get to stronger credit than we've had over the last 2 years. So, eventually winter is coming, right? So there'll be more tough years ahead. But, from a standpoint of doing this publicly and on Twitter and on LinkedIn, is it's visibility, it's communication, it's conversation. There's value both to myself and to, hopefully those that I'm sharing the information with, which is, just out in the ether. You never know if anyone's reading it, right? They show a little stat in the corner, but who knows if that's a bot or if that's a real person. But, you're just trying to create value. And in my environment, like I said, I'm trying to create a strong ecosystem in the state of Minnesota in particular, because that's where I live and work. And, to the extent I can do that in an open, transparent way and let people know that, hey, you can do business here, you can succeed here, and here's some things to look out for. Here's some things you should be thinking about in your own company, or here's some things I'm seeing and doing. At least that way, it at least provides an independent view, or at least my view. I mean, you can take it for what it's worth. It's free, right?
I think when it comes to you sharing your journey publicly, you will be surprised who's following. I'm sure you've met a lot of unbelievable people, and there's a future ahead of you. And knowing your level, you will be surprised who's following. They're not liking, they're not commenting, but they're reading, definitely.
Well, hopefully they're thinking good thoughts.
You said winter is coming. Does it mean that when we take like Flagship Bank, bank's assets, for example, 300 and plus million, do you plan to raise more in order to grow to $500 million to $2 billion in total assets? Or at this stage for the next 5 years, for example, your main goal is to just manage what you already have?
No, we're always growing. I mean, if you're not growing, you're dying, in my view. So, I mean, we're always trying to grow our bank and our franchise. We want prudent growth, so I'm never going to be going to the extremes, in terms of trying to really grow super fast. I think, we're trying to grow with the right people. And so we're looking for strong partnerships, good people, good, small, medium-sized business, young entrepreneurs, to seasoned entrepreneurs for that matter, but really trying to help people grow. And as they grow over the next, 25 years, will grow. And that's kind of the thought process. We've got the banks, we've got the 2 banks currently, we've got another bank, we're announced a merger, to close next year, subject to regulatory approval. So we will grow by acquisition as well. And our goal is just to continue, focusing forward and doing a great job in what we're doing, on the bank front. Eventually, all three banks, the one that, the two that I'm running today and the one we're acquiring, will be under one banner. It'll take some time, and there's regulatory approvals and et cetera that we have to go through. But everybody's aware of that on our team, and we're working forward to that process, and that'll put us at a strong point. Currently, we can still manage and work with all those clients that 99.9% of the deals we see, we can do. And so we're just trying to make sure we're kind of focused on that piece.
You've been in banking for many, many years, probably have seen many different periods. And what I mean is digitalization in here with the rise of fintech and online banking. What opportunities and challenges do you see for traditional brick-and-mortar banks, and how Flagship Bank is adapting with the changes?
I think for me, the big item is the client UX, right? So the big advantage has been over the last 10 to 15 years has been an improved client experience. So the online banking, the ACH portals, the ability to move money more quickly. And the key item on that is moving quickly. We also want to make sure that our clients can move the money safely and or protect their own money. There's a lot of bad actors out there. So from a client front-facing standpoint, there's technology and tools that we've invested significantly in to make sure it's easy for our clients to access and do all the things they need to do on a regular basis with their banking. As I like to say, is we want, them to be able to rely on us to make sure that the banking's right so they can focus on their operation, because that's where the real money's made. And, so I look at it as the biggest fintech benefits are both on the client-facing UX. And then in the back room, there's a lot of benefits now, using, technologies, that we have, for BSA and some other internal operations to, basically protect against fraud, bad actors, challenges that you're seeing on that front. There's a lot of new technologies that are coming, that we're implementing now, or we have implemented, I guess, for many years, but, that are being improved every day. And so that's kind of where the fintech is. There's a lot of fintechs out there that aren't very profitable. There's a lot of lenders that come out in they're going after a market where there's no margin. So, it's you see them and they get a lot of press about these, cool ideas they have, but the ideas they have are not profitable ideas. And you see it in the numbers. I mean, there's plenty of banks out there, and there's plenty of fintech providers that, are saying, they're growing user bases by thousands and millions or whatever a year, and they get written up on some of these online blogs. But you look at their actual numbers, it's not profitable growth. I mean, I could grow by millions of clients a year too if I wanted to get every terrible client I want, that's not going to be profitable. But then what benefit is that? So in this market, in this business, you can't scale a business unprofitably. That's not a very good long range plan in our business. Yet you see it happen over and over and over again. I mean, the examples are crazy. On deck, you've got several of these kind of online quick fix, small business lenders that more or less are graveyards. They've been sold off or closed or shut down. And usually they're sold off to a bank who's buying it for the technology, not because their actual risk management matrix was adequate. You see it on the consumer side with some of these clients that are trying to do debit card or payday loans or, peer-to-peer type situations where there's a lot more risk. I mean, take Lending Club as a great example of that. Faro is another great example of that, where you can look at their financial profiles and their history here, and you can see that the risk management matrix in that business isn't working. I like fintech. We're building it into everything we're doing, but I think there's profitable ways to use it and there's unprofitable ways to do it. And I think there's a lot of times the unprofitable ways are being glamorized instead of looking at the profitable ways and how banks are really using it to support their clients.
Okay, now and on the other hand, we have physical branches to keep opening up new ones in the new cities, new towns while expanding, or how is it with them?
Yeah, for us, I mean, we all, more or less are on the acquisition front on physical branches, right? So, if we add branches, it's usually through an acquisition of another company. We acquired Landmark Community Bank in 2015, then merged it in 2016. We bought an Americana Community Bank branch in 2017. Like I mentioned, on the security bank side, we've got Cambridge State Bank that we, announced a merger pending a regulatory approvals for 2024. We bought State Bank at Hamburg in 2018 on security bank side. We've done on the physical side more through acquisition because then you've got that existing client base, and I think from a building new in this market, it's a little bit harder. A lot of them, the branches are billboards, so people have close proximity and they're a jumping point for any challenges that your client might have with their accounts or, if a need in terms of loan or requests. So I don't see us building out tons of new branches, I guess is the long answer to it. But, I think they serve a very important purpose.
I want to talk a little bit about small business owners because many listeners are business owners seeking to raise debt to expand their businesses. And 99% of the time, they're sitting on the other side of the table in front of you. So what is something they may not know about dealing with bankers that could maybe be beneficial for them to understand?
I think, first of all, we want them to succeed, right? So, when we look at a request and we ask it for information, it's not because we're trying to see, how they're going to fail or, we want to rip apart their numbers. Is we want to see how the detail supports kind of the plan. And so I think a lot of times, from my understanding, is that, they come in and we're asking for a lot of information. We're asking for financial and details and the more organized you are, the better it is for any bank to be able to make a decision because the information is more freely available. But B, the reason why we're asking those questions is generally because we've seen people struggle with issues in the past, right? So providing, the detail on sales concentrations. Well, why are we asked for sales concentrations? Because we've seen situations where, a business has lost the largest client and then that, made the business struggle and ultimately not make their payments, right? And so we want to help them protect themselves from it. So a real good small business bank or community bank like ours is really asking those questions to try to help and support you so that when you acquire a company or you're looking to grow your company, you're kind of building that foundation, that strong balance sheet, as Jamie Dimon would say, the fortress balance sheet, right? From a bank standpoint, we're also looking at that from a business standpoint is how do we make sure that you have a fortress balance sheet? So as you grow, you're supportive and you've got resiliency to, multiple potential outcomes. And so I think sometimes, we're not trying to figure out how to say no to the credit. We're trying to figure out how to say yes, how we can help. Maybe there's some tools you're not using. I've seen that a lot lately. People rush into a 7A loan because that's what everybody says, you should do because you can get super amounts of leverage on your small business. But does that really make sense for the company? A, is that really the best option? B, and from a conventional standpoint or structure, maybe it makes more sense to go into kind of more of a traditional lending for that type of business. Maybe it's got heavy equipment. Maybe there's more real estate involved and there's other opportunities where you can use a couple different programs. In our state, we got a Minnesota Loan Guarantee Program, which is even better than the SBA in terms of, structuring. It's not as large of a dollar amount, but for a lot of small businesses, they can really bridge gaps and build opportunity. So just making sure that, you've seen all the options, and our goal is to help them grow, not necessarily, we're not asking the questions because in asking for that information so we can dig into their business and tell them what to do.
I was reading your annual report, and there it said Flagship Bank Minnesota ranked third in best business bank, second in best small business banking, and third in best commercial mortgage lender. So I guess you see a lot of small businesses and you have a great overview of the market. How big is the actual opportunity for millennials to acquire businesses from baby boomers?
I think it's a great opportunity. We're seeing a lot of transition now between whether it's family, existing owners selling to their millennial children as they're coming up, or it's a succession planning situation. I think there's a tremendous amount of opportunity there. I think the biggest, item is being prepared for it, not jumping into it blindly per se. But I think, from a standpoint of what I see in my industry alone, there's a significant amount of people that are looking to retire. I know talking to other, industries, I've seen a significant amount of people that are, baby boomers or older that are on the verge of retirement, and they don't have a succession plan, right? So I think that's the key item is, being that succession plan for that owner is a lot of opportunity. I think matter of buying the right business makes the most sense, or the biggest challenge, and finding that and then being in the right spot at the right time when somebody's looking to sell is important. It's easy to say, me and you can write up, tweets and talk about it. It's a lot harder to find that right, person that wants to sell to somebody other than their family member. Or, we've seen, situations where it's even a partnership where maybe one family member buys part of it, but they bring in partners to help them buy. I do think there's a great opportunity, if not right now, coming over the next, 5 to 10 years, just based on the math.
I have a few stories in here which I've heard from podcasts, from people in real life, and I just want to know your thoughts because I haven't had chance to ask from people like you, a person like you. There is a local shipping company here in Northern Europe. Let's put it in this way, and the owner said that in one moment they had debt of 1.3 billion euros, which is pretty much the same to US dollars. And then the Swedish bankers visited them pretty much every second week. They were in their office seeing how things are going. And then a few years went by and the debt was down to 1 billion. And then they visited only once a quarter. And the guy said that it was very interesting to see, like, when things got serious, the loan got bigger, the guys were back. And then when it went back down to 1 billion, they didn't see these guys that often anymore. So my question is, what are the thoughts or worries of the bankers during these type of situations?
Yeah, a lot of it has to come down to execution, right? And so there's a couple things. This is the one reason to have a long-term banker, right? So they can see how you manage through different cycles. So if you're working with a bank like ours, which I consider ourselves more relationship bankers, right? So, we built a relationship over time. There's clients that have banked with me since I started, at the first bank. And now they're, over here at Flagship or Security. And, when you've been with them a long time, you can kind of see early on, say you're a millennial who's never owned a business before, you've come out and bought a new company, you're probably going to have more conversations in the front half of that discussion. And same with the large companies, right? Where, that first portion when your leverage is highest and you're transitioning, the bank just wants to make sure that you're executing on plan, you're following your strategy, the numbers are following through the way, hopefully they're following through at or better than your projections. And, and that you're making progress going forward. As the debt goes down, obviously the risk to the bank at that point should be getting better, because hopefully over that time you're increasing your revenue, you're increasing cash flow, managing your expenses. So as, the debt, and then if the debt comes back up, and you're getting in a higher leverage position again, there's just a matter of just having more fluid conversations, understand how you're managing through that, period of weakness. In really good times, there's a lot of times where, the companies, you look over the last 3 years, a lot of companies made a lot of money because interest rates are low. The financing capabilities were there. There's, at least in the United States, there's a lot of government support and free money that came out. So you were able to manage through it pretty well. There wasn't a lot of overall risk, so there wasn't a lot of conversations. Now you might be seeing, a little bit more stress on, or compression on margins in current environment with interest rates being higher. More people are managing their payables more aggressively, right? Because that money has a real cost and value. And so, the conversation is more about, like, well, what are you seeing? How are you managing, through this? Maybe your debt service coverage ratio is dropping a little bit, but it's still obviously adequate. If it's not adequate, Do you have permanent working capital, tied up? What are you looking to do in terms of managing the balance sheet? Maybe you've got everything sitting on a line of credit that's got a really high rate, and maybe there's an option to maybe term out some of that using, your equipment or your restructuring in a way that kind of streamlines the payment stream. There's different options available, and just making sure you're having those conversations in times of stress so that you can kind of work through it a little bit more comfortable. There's a lot of different ways to approach when you hit times of stress. The key item is just don't put your head in the sand and go ostrich, and it's not happening to me. It's not happening to me. It's the best way is to stand up tall and proud, and, whether it's good or bad, and just say, hey, here's what's happening. Here's why it's happening. Here's my plan to fix it. Or we're working on a plan to fix it. We don't see right now, how we're going to get the margin state, or the plan, but at least, we've identified, we understand where the situation we're in, and here's how we're working to address it. That work goes a long ways in a relationship game.
That makes total sense. Then there is another story which I kept hearing for some time. This is a real estate guy, and he was acquiring apartment complexes. I think it was even in US. And when he was smaller, he said he had like 25 million in debt. And then the recession was coming, and the bank was like pushing to get the money back. I don't exactly know how the contract worked, but he said that he had like immense pressure. And he promised to his wife that it will never happen again. And what he meant was once the recession was over, he got really into it. And next recession, I think it was 2008 or 9, he had like 600-700 million in debt and much bigger business. And then the bank called with the approach of how may I help you, or what can we do on serving you? My question is here, you as a banker, can you share again your thoughts on a story like this and why it was like this?
Well, it all depends on the bank and the situation. When you go into the great financial crisis, there was a lot more discussion because, there was a lot more pain across the whole industry, right? So, if you just started foreclosing across everything, into a weak market, that might not have been the best possible outcome for the bank and for the client, right? If there was stress. I think from a standpoint is we're always trying to look at ways to mitigate risk, obviously mitigate loss, and work with the client on the best possible option. That goes back to my last answer where, being upfront about where you're at, what you're doing, and how things are going is important. Because then you can come to be more creative and think about what the actual solutions need to be. And sometimes, those solutions aren't what you want them to be. I think, part of real estate development, a lot of times the scale is a big part of developers' plans. Not a lot of real estate guys start small, stay small, right? They keep scaling up and kind of moving. The big item is as they get larger, the good ones, they bring the leverage ratios down. So as they roll up and they 1031 or they move up on scale, generally their loan to values start to move lower. So you're seeing more equity in the deals when they get to be much larger deals. So that's kind of a part of the process. But yeah, without the details, it's hard to know exactly why.
Okay.
But I would think that that's probably a good part of it.
Okay, you said you're in a relationships business. Your partner, Brian Wagner, who's the president of Flagship, while you're a CEO, you guys have worked together for 18 years. There's a lot to be said about working with someone for that long of a period. What makes this relationship so valuable?
We started together, and we went through the battles of the great financial crisis together. It's like from a standpoint of it's, we've grown up in the business. We've seen the same things. We know the same borrowers in terms of, we've gone through these experiences that were pretty life-changing. I mean, if you look at the great financial crisis and then, going through a bank that failed, I mean, we're both working our butt off to try to save and support it every way we could till the day it closed. It's something where you get to know people. When you get into a challenging situation, people react differently. And in our business, it's valuable to know how people react when they get in terms of high stress. And since we've kind of been in the foxhole together over last 18 years, it's been exciting. We got different strengths and weaknesses, and we work really well together in that regard. And so it's been fun. We talk obviously every day and have since the beginning of time, in terms of banking. So, we see things similarly but different. And so that works out really well for us, and it's allowed us to grow, and we've got, we both got families and we're different communities, and it's just a lot of fun to be with somebody that you've worked with for that long, because you kind of know what you're trying to do and you're kind of on the same page. It's multiple people rowing the boat the same direction, right? And so it works.
Now, what is your approach to building and maintaining strong relationships with your customers and the community you serve? I'm asking because a few months ago, I had an investor visiting me from London, and they're doing large acquisitions and investments as well. And we were on a dinner. And what was very interesting, we started talking about building relationships and maintaining relationships. And he showed me his iPhone, and in iPhone, under the notes, pretty much where you have people's numbers, you can have you can pretty much take notes in here. And he showed every random, pretty much for me, a random person on his list. There were like pages and pages of notes, and he showed me some of the messages he had sent to his clients where it's birthday of their kid, birthday even of their dog, and the guy responded like, sorry for my language, where the fuck do you know the name of my dog? So stuff like this. So it was eye-opening pretty much how much effort actually goes into this building relationships. All the people are talking about this, all the books and different things they do, but there I actually saw on how the professionals actually work. So my question for you, like, how do you approach this relationship game with your customers, with your community, with your clients?
I think to me, it's a matter of making business easy, right? And as you get to know people and you work with them, and they have needs and wants, being able to react to what their wants and needs are is important. So it's great. It's great to be able to help people kind of work through challenging times. It's great to help people grow and build, and do so in a way that they know you got their back. In my industry, that's the important part, because like I said, it's not about just making the loan. That part is the easy part, in our business. The hard part is making sure that the loan gets paid back, right? The best loan made is loan paid. So, it's that journey and that experience over time, and being, a partner through that journey, and allowing them the flexibility to grow and build. And some of it might just be, you're grabbing, a lunch, or, flying up, or, if it's in your community, you're probably seeing them out at a sporting game or, a kids event. There's a lot of different ways that you kind of interact with the community and with, individuals that both obviously bank with us, but, just in general as well. I don't have any kind of cool cheat sheet structure like that. I think that's kind of creative. I guess I haven't gone that far to have, that level of detail. I think that's awesome. But, my goal is just, if somebody calls me, they know I'm going to give them an authentic, honest response. I'm going to be helpful, and I'm going to try to, give them, whether they're a client or not. I mean, I'm always trying to give advice that I think will keep, business owners and individuals out of trouble, particularly on a financial decision. I'm obviously a banker, so I'm going to be generally more conservative, right? Because, I'm looking for the risk reduction side of things, so I'm not going to bat, 100% on my recommendations. There's been, others that have done well, even when I was a little bit nervous about it. But, I think that's kind of my goal in terms of relationship banking, is that they know they've got the support, they've got this creativity, flexibility, kind of reliable banker in their corner, so that they can go out and say, okay, how can I run my company better? And if I have an issue, or I have a need, or, a concern, I call Andy up, and we can get, over and have lunch and talk through it, or, come into the bank and say, okay, what do I need to do here? Because I'm seeing some stress.
I want to ask about the market and the overall situation at the moment. Like 4 or 5 months ago, you posted publicly, we have over 100 million sitting at the Fed that I want to get lent out to growing Minnesota businesses. Please drop me a line if MN, I guess it's Minnesota businesses, has a borrowing need. How has the 4 months for Security Bank as well as Flagship Bank, how has it been?
I put that out there because we did have $100 billion sitting at the Fed, earning EBA rates, right, at, 5.35, 5.4%, and I want to help people grow. I want to help our state grow. And so, we weren't seeing a ton of loan demand, when you came through the summer. And, you put on, if you're on Twitter, you see it a lot where they're saying there's no banks with money and nobody's got cash to lend. The market's, disappeared. And I'm thinking I'm sitting on all this cash, and I've got no loan requests that are coming in to deploy it. And so, that was kind of my thing of like, hey, raise my hand. Hey, look at me, we've got cash here and we're looking to grow and support, clients as they build and, and or refinance, existing clients. So we've been able to grow our loans, since the summer. We've got a great pipeline right now going over the next couple of months. So, I feel really good about what we're doing. It's always interesting, it's some of these, in our business, the sales cycle is not quick, right? So, you might get a proposal out or you might get an approval, but it's usually, on the fastest case, you on like an equipment loan, you can move really quickly. But most, real estate deals are 60 days, usually from initial to closing, if not 90 days. So some of these processes you can always close them in 30 days. It's not normally common. You see a ton of deals where, you get the request and it's closing unless it's like a 1 to 4 family rental property or, something on a smaller scale, for the commercial or business. Generally those take a little bit longer closing timeframes. And so, what we talked about 4 months ago are deals that have been closed in the last couple months, right? And months now we're looking into the next year are deals that kind of came in, a couple months after, posting that. But, we kept a lot of liquidity through the pandemic. So I was fortunate that, we had that cash sitting in the balance sheet to allow us the opportunity to get out there and help people.
Your another post, because I can really see how you're thinking. So I like to ask a few questions. You posted many years ago, I would made a fun for reading biographies and business books. Why not read a good fiction book instead of that non-fiction and magazine you keep reading? And you're a big fan of listening podcasts on also on top of reading, you're listening podcast on biographies by David Sendra at Founders Podcast. And you said something very interesting. I have come to realize that I was just copying what other founders have done. So my question is, how big of a fan you are copying versus experimenting with new things?
I'm 100% a fan of copying, proving concepts. So from my standpoint, I always look at what are the best banks doing. Mm-hmm. And when I say best banks, I'm talking about profitability and asset quality. So, I'm a huge fan. I read tons of history on bankers over time, but there's always lessons in the story. And so, if you go back to like the beginning, when I first got into banking, I was reading all kinds of books and I was getting made fun of because, we'd be out at, the lake or something. And here I am reading a business book and everybody else is reading, a Dan Brown book or, like something or, something more, interesting or at the topic. But I didn't have any of those experiences or stories. And then when you listen to the Founders Podcast or any podcast that goes over kind of those books and those histories, you realize that a lot of these other founders or CEOs did the same. And so, my goal is to hopefully I can take lessons learned from, other people that have become successful on a personal level and then also on a business level. And in a bank standpoint, bankers are so private. There's even within the industry, they don't share overly too much. So, it's trying to understand the story. The nice thing about banking is that it's public. You can look up the financials on any bank. We all, private or public, report quarterly with the FDIC. Credit unions report quarterly, through their regulator. So you can get a feel for how decisions are made over time just by watching what the individual says and what they're doing online, and then looking at the numbers and how they're kind of performing. And so try to take the ones that have done really well and try to say, okay, well, why did they do well? Or what was their strategy? How could I make that happen at my bank? And, or how can I implement something similar for my team, my community, to really build. And I've seen that, fortunate that, I've had family that's done that very successfully over time as well. And so I've been able to kind of learn and understand from that standpoint. But yeah, I'm a fan of copying, in terms of testing, trying. I've tried a lot of stuff, particularly in terms of trying new things in baking to see if that drives traffic or interest. It's worth testing, but, it's always within, the guardrails of what we can do. And like I said, I want to do stuff that's profitable. I'm not looking to.
One guy who's been doing reasonably well, and not in banking, but he's Jeff Bezos. And you mentioned in one of your posts a word, relentless, one of Jeff Bezos' favorite words, and one he repeats in his annual shareholder letters. And this is from you again, we all need to be relentless in a way we approach our client's needs, wants, and demands on our business. So what does being relentless really mean to you?
To me, it comes back to the details, right? So I think there's a lot of people that look really high level and are really excited and really focused, but never get down to the actual detail. And to me, so, obsession, relentless, this, is a matter of really focusing in on how you can be correct with the details and allow that to grow. So like in my industry, I still spend every beginning of every month, I still build my own spreadsheet, which is, not a very efficient process, but it's a way that reconnects me with the details of our bank and what we're doing. And then, using, more technology, we've got other things that we can use to scale. But the idea being is that really being focused on, okay, what should we be doing? What are we doing? How are we managing that? From a client standpoint, are we really meeting the needs that we need to, or what are our clients asking for? What is the common theme, or what's some of the trends that we're seeing that we should be, supporting in a way that, helps them and helps us. And so really being focused, but it's not just be saying we're going to do this and then not doing it. It's a matter of really being focused on the details and how to implement it so that it can be successful and sustaining, right, over a long period of time.
Looking back at what you've built and knowing what you know now, can you say there have been any moments where you could have been more relentless? Maybe you have a story about this, or something you feel that, okay, this was the moment I could have done better when it comes to being more relentless.
Well, there's a lot of them. I went through the great financial crisis, right? That whole time period, I probably could have been a little bit more relentless on focus. But, I did also work a ton, right? So I was obsessive in industry and in work. But, a great example is that, in 2012, Live Oak Bank is a pretty successful bank that a lot of people know here in the United States. And they got into the veterinary area and the dentistry area, and they had, this SBA program that they were doing. And at that time, they're still relatively small in terms of size of bank. They were $200, $300 million bank, obviously doing significantly more volume. And, I looked at it, I kind of did some of the high level details of what kind of information I, built a whole portfolio of, here's the things they were doing, but I never kind of leaned in and really got focused in on how we could use that to grow our company. I thought it was a great idea, great structure, great lending model. But I didn't, probably spend the time that I should have at that point in time, which has turned out to be obviously a publicly traded bank that's grown significantly since then. I could have spent more time kind of focusing in on how we could have used that and kind of built, a larger 7A program starting in, like I said, 2012, when we bought Flagship in 2013, 14, 15. I probably could have spent more time on that.
Okay. Now, a little bit about your day-to-day. Could you maybe describe your typical day as a CEO of Flagship Bank and the president of Security Bank? Like, what are your main priorities and responsibilities?
This goes back to Jeff Bezos, right? The decisions I make today will be shown in the numbers that we have in 3 years from now, right? So a big part of the things that I spend time on is making sure that we're positioned as a company, both at Security Bank and Flagship, that 3 years from now, we're still succeeding and we're growing. So I spent a ton of time thinking about, okay, how are we going to deploy our existing resources so that we're stronger in 2 or 3 years from now. So I do spend a fair amount of time just kind of planning and reviewing and, making sure, we're in the best possible position. From a basic need standpoint, a lot of things banks do, we're looking at making sure our clients, are satisfied. In today's environment, deposits are really large, part of what we do. Obviously, interest rates have moved a lot. Our banks are core funded. So, we don't have brokered CDs. We don't have internet CDs. We don't have borrowings. So, our business grows based on, deposit growth and new clients. So, how are we reaching out to new people, making sure we're kind of focused on our team and giving them the resources they need. On a lending standpoint, a lot of days, when we get loan requests in a community bank, we know kind of what things are going on. So, we'll talk about new customers that are coming in. So-and-so's got a business, they're trying to grow. They've got this request, or, I've got this opportunity to help the city or municipality with the bond offering. Or, we've got a client that's looking to either refinance or acquire a new company. Let's look at the details. And, is this an opportunity that we want to pursue? So I spent a fair amount of time on the credit side, just reviewing and talking about new loan opportunities. I go out to lunch quite a bit, with existing clients and new clients. But a lot of what I'm, spending my time doing is just making sure we're in the right possible position, as we move forward. We've got a great team here, both banks, in the day-to-day options of serving the clients in our branches, and making sure that, everything is running smoothly. Because, our client, when they log in, they want to see their money there. They want it right down to the penny, and they want to make sure they can move it or do what they need to do with it. So we need to make sure that's just table stakes in banking 101. But, we're trying to take it one step further and say, okay, how we can help them grow and how we can help them build, and making sure that they feel good about what we're doing. So I spent a lot of time just thinking about those things and making sure our risk profile is where it should be, and trying to keep things simple. I don't get into complex structures. I don't believe that complexity drives value.
Now, when it comes to young up-and-coming talent, there are probably thousands, tens of thousands of people who would like to one day be a CEO of a bank. What advice would you give to aspiring young leaders, talents in banking industry, those who are looking to climb the ranks and maybe one day become?
A lot of it's focus, in getting back to that kind of relentlessness. I think when you've got opportunity, you got to step up and then do the work. I think a lot of times, when it might not be the fanciest of jobs, it might not be the funnest of jobs, but if you jump in with both feet and really work hard at the job and the opportunity that's in front of you, you will move up the ladder, and you'll move up the ladder more quickly. If you're always waiting for people to tell you what to do, so sometimes it's anticipating the needs. So, if you hear that, the company is running into a challenge, or, that there's an opportunity, for improvement, you can bring that stuff forward. Nobody's saying that you can't bring ideas forward. In fact, I would bet every CEO that you meet would want to hear ways to improve their company. They might not always agree, or it might not be the best time, in terms of, certain projects or technologies, in terms of what makes the most sense. But they will all appreciate that you're thinking beyond just your day-to-day tasks and saying, okay, here's an opportunity for us to grow. And not only that, but you're doing a great job on what you're doing. Again, attention to detail is everything. That's the difference maker between, the average person and the above average person. Is generally they're really good when it comes down to the details of their business and how to use those details to leverage their company to grow.
Little bit about the future. and also about today. Andy, what motivates you today, and what do you want to accomplish next?
Oh, I mean, one of the big things I want to accomplish is that, I want to help 10,000 small businesses in the state here. So, I mean, we're always trying to figure out ways we can continue to help them grow and build. So, as we continue to grow and build ourselves, I think that's important part of it. I want to make an impact on our state and our community. We have a great state here in Minnesota. Every state comes with its challenges, but I think our goal, as a bank in our community is to help that state grow and help our communities grow. So I'm always trying to think of ways I can make an impact in that front. And always from my standpoint, in terms of our staff and our community, I mean, I want to make sure that everybody that works for me and that is loyal to the company retires successfully, has a great career, and doesn't have to worry, am I going to have money? So we do profit sharing. We cover all of our employees' health insurance deductibles. We want to make sure that, if you're loyal to the company, you feel that we've been loyal back to you and taking care of you over time. So, that's kind of the things that motivate me. And, we've got great employees that have been with us a long time. And I hope, over the next, I've got a long time to go yet. So, hopefully everybody, stays with us and grows with us and we can make that, continued impact on our state.
Now, what about yourself? How has entrepreneurship and building large businesses changed your life and changed your family's life?
Well, I think, it just provides more opportunity to do new things, right? We've traveled a lot. My family, we take our kids. So we've gone to national parks across the country. We've traveled internationally. You get to see the world with a broad spectrum. I think there's a lot of opportunity in that. So I think that's been fun. I try to live a normal life. So, outside of, work, we spend most of our time, chasing kids around sports activities and hockey games and the like. So, from that standpoint, I mean, it's normal, and that's kind of what I enjoy. And so for me, it's more of the travel and the opportunity to meet cool people. I mean, there's a lot of people doing amazing things, in the state of Minnesota and around the country that are, that I only got to meet. I got to meet you, Mick, here through the podcast. I mean, I think you don't get those opportunities, otherwise. So I think that's pretty awesome.
Andy, let's wrap up with famous five. How old are you?
I'm 41.
Favorite book?
I like Titan, with John D. Rockefeller. I thought that was a great book.
Married, single, kids?
Oh, I'm married, 3 kids.
What car do you drive?
I drive a GMC Sierra.
What's the best investment advice you've ever got?
That's challenging because there's a lot of questions. There's a lot of nuance to investing. I am a value investor and I'm a swing trader to some extent. So, I think I always buy things, 50 cents on the dollar, so I'm more of a value buyer, but value with growth opportunities. So, I think trying to buy assets that are undervalued at the time with strong opportunities for growth is the most important investment advice you can make. Don't buy the cigar butts, don't buy, businesses that are just cheap and there's no catalyst opportunity. So I think that's been very important to me over time in terms of focus.
I'm sure people have enjoyed this talk. Where can they find you?
You can find me on Twitter. I'm just at Schornack. And then LinkedIn, the same. So you can find, those are my 2 social media places. Otherwise, you can find me in Minneapolis hanging out at one of the banks around here. So.
Okay, Andy, that's it. Again, thanks a lot for doing this. I was just extremely surprised. I reached out to you and you said, okay, let's do it. And I was like, okay, that's it. That's how it works. And so I was big thank you for doing this.
Yeah, no problem. You're welcome.